it's normally a lot of times an individual relationship, right?
True.
You know, sometimes with certain credit unions and big banks, it makes it harder to build that relationship, but it's not impossible. You know, you have big corporations where they have great representatives where you build a rapport with them and they go to bat for you and make sure you get your loan funded. So you just want to talk to them and see what's going on. Absolutely, Kenneth. I appreciate all the questions, and I definitely want to elaborate on the point of how important it is to really build those relationships, right? You know, whether it's credit union, large bank, broker, a lot of times your local representatives, you want to make sure they have local representation and you just build in a good relationship with them, because again, they're going to go to bat for you if you do that. I even have a personal story about that myself where, you know, obviously as a real estate agent and, you know, a W-2 employee at the same time, my finances are all over the place, right? And got student loans, different things of that nature. And you know, during the time of 2021, or I was trying to purchase a home for me and my family, and the lender that I actually already had a loan with, right? They're calling people to refinance, different things of that nature, and I'm like, well, yeah, I mean, I'm not refinancing that property. I have tenants in that property now, all this and all that. But I'm like, yeah, I'm interested in buying another home. Do you guys, you know, can you do that? It's like, yeah, I could do that. You know, I let them know my situation. I'm like, look, I'm an agent myself, right? So I know the industry. I know all of this type of stuff. You know, I got these different things going on, bam, student loans, all this type of stuff. Hey, can you do it? It's like, yeah, I could do it. Send me all your stuff. Boom, boom, boom. It's like, okay. I think I got into escrow, right? I got into escrow, found a place, everything like that. And it was like, yeah, I won't be able to fund this loan.
Oh, man. Wow.
Exactly. It's like, are you serious? It's like, I already have a loan with you guys, right? So I'm already a customer. Obviously, that mortgage has been paid on time for years, different things of that nature. And you told me you could do something and now you can't, right? So that's the value of relationships. Obviously, I'm in the real estate industry, so I know different lenders personally, and I called somebody I knew personally, and they were able to quickly service the loan. And
that's good.
Ultimately, what it came down to is that because during that time, so many people were refinancing during COVID, and the interest rates were very low, so they were doing that. He didn't really want to take the time to deal with my student loans and all the extra paperwork that came with that, right? So it wasn't that they necessarily couldn't do the loan. They probably could have, right? It met all the regular guidelines, conventional loan, all that sort of thing. But it was just like, am I going to waste my time on all this paperwork for what I'm getting on this? Or I'm going to just go to get 5 other refinances, right? That was easy.
So basically, they were going after the money grab situation and what they can receive, and again, yours was probably a little bit more difficult, right?
Yeah, it was a little bit more difficult. They didn't want to deal with the self-employed. They didn't want to deal with any of that. So they just was like, I can't do it. And again, I was already in escrow. So could you imagine, you know, I'm planning on moving, you know, relocating my family to a different home. And then it's like, I'm going to lose this property. It's already hard enough to get into escrow during this time, especially when, you know, people are having bidding wars where they're spending 20, 30, 40,000 over list price.
Yeah. At that time, you couldn't find a house. It didn't matter. If you didn't have the capital to put down, it was just done. So, but going back to, you know, obviously the circumstances you were going through, but from my understanding, a lot of veterans that you deal with, or the veterans and others that you deal with, mainly you make sure that they are pre-underwritten, correct? When you shop them with the multiple lenders?
Absolutely. So, you know, there's a lot of different clever terms that they use when you're getting finance, right? You have pre-approval, pre-qualification, different things like that. It used to be standard definitions for both of those words. So now you really got to actually ask the lender what that means, right? Because when you talk about pre-qualified, that just means, hey, this person called me on the phone, said they make this amount of money, said they had this credit score, said, you know, they don't have no car payments, no late payments, and no credit cards. And I approved them based on what they told me. You know, that's usually what a pre-qualification meant. Then you have a pre-approval where it's oftentimes a lot more solid, where they actually got those documents from you. They verified, they check credit, different things like that. And then you have higher layers to that process where you have lenders that'll go above and beyond and get it pre-underwritten. And what that means is they'll take that information from the pre-approval and send that to an underwriter, have them actually look at that, or whether they're doing it through the software or what have you, and they'll go through that process that you actually need to purchase that home to really make sure that you have that stamp of approval that you won't need any additional information and it can be closed on that loan product.
Yeah, and I know just based on experiences of some home purchases I have, went through my family. It's always better to be safe, right? When you're going through the process, make sure that you're pre-underwritten. Some lenders won't even actually do that for you. Well, I'll tell you, that's probably not the lender for you. Because you want to make sure that, because again, I'm not going to stretch this enough, it's the largest purchase you're going to make of your lifetime, typically, most. So with that said, make sure it's safe, because there's so many different circumstances where that you can be purchasing a home. Luckily for yourself, you obviously have multiple properties, and this was a secondary property, right?
Well, yeah, it was. It was another property, but I was looking to move into that particular property.
So yeah. So again, that circumstance, that is again a very bad circumstance for any family. Mm-hmm. You're moving out of one place, moving into the next place, which most people are coming from renting a property to moving, or this property is already sold and they're moving into another property, and your lender says we cannot fund the loan.
Yeah, absolutely.
What does that do?
Yeah. It could leave you stranded, right? Especially in that time, because you think back to it, and it's very difficult again to get a property under contract. And, I have some kind of different, gems regarding that on how you want to approach it. And one of the things that I kind of helped my clients during that time was that you had Zillow buying a lot of homes. You had Open Door buying a lot of homes as well. Well, even though the market was really competitive, a lot of their listings stayed on the market a lot longer because they usually have terrible pictures. They have terrible pictures. They do, and even some traditional sellers that don't have the greatest real estate agents, homes with terrible pictures might not be that terrible, and those were the homes that I was able to hey, let's go check that out, and even one for myself. So I ended up buying a house from Open Door. It was on the market for I think 115 days or so. And at that time, because this is October of 21, I believe, and stuff was flying off the market. But that particular home stayed on the market very long because they were price gouging, right, trying to time the market. So they had it listed very high, and they started coming down. And just being knowledgeable, I knew it's they didn't come down as much as I want them to, but I know it's approaching that 120-day mark, so they about to drop it another $15,000. Well, that's the price I want to buy, but I'm gonna come and offer them that price now, 5 days before they drop it, and most likely they're gonna accept it, which they did, right? So
hold on. I don't think everyone really kind of understood that, right? As this is why we always talk about getting getting what you pay for always, right? Well, this is a skilled realtor strategy, right? The understanding and researching and knowing the area, knowing the property that he's looking for, knowing the price point he wants to go in, but then actually approached it by going in literally 5 days before the average price drop was happening through the multiple price drops that transpired. So he was able to be one of the first bidders at that time, right?
Absolutely.
Listen, that, all realtors aren't equal. So That's what we'll say. We'll say. There's multiple strategies. But I'm sorry, I didn't mean to interrupt. I want to let you finish. I just wanted to make sure the audience understood that.
No, absolutely. And that's a great point. And it's a great strategy because when you're working with those companies, right, they don't look at multiple offers anyway. When you go, and if you've ever submitted an offer for Open Door or even Zillow, Redfin, a lot of those places, once the offer is submitted, they reply in a certain amount of times. They may allow you to submit a backup offer, but they're not looking at that backup offer until they decided on that first one. So you're oftentimes not going to get in a situation, you're less likely to get in a bidding war, especially if you're offering list price or somewhere around the range that they're looking to accept. So, that's a great strategy on how to get a home. And again, I mean, interest rates are higher right now, but there's so many different options and so many different ways in this market to still purchase real estate. And the main thing that we wanted to stress here regarding buying a home right after service is that make sure that you're knowledgeable, but also make sure that you hire knowledgeable professionals, because we just gave the example on how that could make or break you being able to purchase a property, right? Because with the VA loan, there's going to be lenders telling you different things regarding their overlays, whether they're going to accept it. Is that lender going to go to bat for you? Is that lender even knowledgeable of the VA loan? That lender company might offer 10 different products. If they don't deal with a VA loan on a regular basis, they may not know much about it. And even if they close those loans on a semi-regular basis, they still might not know a lot of details about it, because they don't specialize with working with veterans and active duty service members. So you want to always get someone that it specializes in working with what you're looking to do, whether you're looking to get an investment property, whether you're looking to utilize your VA loan for primary residence.